What's up everyone, it's Karthik with MoneyVest. So I did just get off the plane. I was traveling for the last 4 hours here, but I'm in India right now for the next couple days, and then I'm of course flying out to the US later this month, and we've got our Tampa, Florida meetup coming up later this month as well. So if you haven't already signed up for that, if you're going to be in the area, if you're going to be in Tampa, Florida on November 24th, let me know in the Discord and I'll add you to our meetup. We're gonna have, nice little food, drinks, conversation. It's gonna be pretty fun. But nonetheless, market starting off on a very strong footing in the month of November here, November 1st, starting off with a very nice gain on the S&P 500 and of course the NASDAQ as well. The QQQ is up over 74 basis points. We had the S&P 500 closing in at just over 5,700, up over 40 basis points here on the day. There was some selling pressure towards the end of the day, so we did see some selling pressure post 11:30, and we were down about 60 basis points, and the S&P 500 also rolling over from those highs, down about 80 basis points. We were much higher at one point during the day, and of course coming in very short of expectations on the unemployment numbers as well. So the US economy only really adding about 12,000 jobs in the month of October, impacted significantly by hurricanes and the strike as well. And also 44,000 jobs subtracted because of the Boeing strike and manufacturing sector, while hurricanes also likely held back the total number as well. And reversions also lowered the previously reported jobs number, total by 112,000 for August and September combined. So, I mean, this labor market really isn't as strong as many people hoped for, or at least expected. And a lot of those previous reports are also getting revised down significantly. If you come over to our market calendar, you'll notice on the economic calendar side, if I remove for this low and medium impact item, unemployment rate stood steady at 4.1%. But I'm really not sure how much I trust that number. Like, I'm going to be honest, and I'm one of those people that never really goes for any type of conspiracy theory. Like, I like to look at those numbers from a face value standpoint and really not read too much into it. But I'm really starting to wonder, like, what exactly is going on here, because even if you take a look at my unemployment spreadsheet, so if I open this up here, we've done this math in my previous videos as well, right? So this is going to be that spreadsheet where the JOLTS numbers, we've got the job openings sitting at 7.44, and the unemployed persons, which is the civilian unemployed persons in the US right now, almost at 7 million, so 6.98 million right now. And that ratio, of course, is sitting at just over 1.07. However, the more important thing here is the unemployed persons relative to the participating population, because we actually did see the participation rate. If you look at the medium impact item, you're most likely going to see the participation rate over here, 62.6%. So it did decline slightly. So that's what we have, 62.59 or 62.6% if you're just slightly rounding up. So 166.5 million is the participating population. Unemployed persons are 6.98 million. You can actually see that on the BLS website. So let me just open that up very quickly. So that's going to be bls.gov. You can pretty much go over to that website yourself. And again, once you get there, you're just going to wait for a couple seconds here. There we go, national unemployment rate. And we're going to open up some charts. So we're going to read more over here and select the civilian unemployment. Boom, there you go. And this is the number that we're talking about. There's a slight uptick in the number of people that are now unemployed, from 6.8 going up to 6.9, almost 7 million. And if you plug this number in, right, it's at that point, it's just math, right? This is just math here. Unemployed persons divided by participating population, and you come to 4.19%, or just rounding up 4.2. However, the reported rate is 4.1%. So that is the actual unemployment rate. So again, I'll let you decide what you want to make of this number here, because this was the last labor market print before the elections. Next week, we've got the elections in the US. So of course, again, not reading too much into it, but some people would argue that they're cooking the books, trying to make these numbers look as better as possible for the elections. I'll let you be the judge, but there is definitely some case to that, suggesting that even mathematically just does not make sense. Regardless of the reasons, of course, you can't discount the reasons here, because they were pretty serious reasons. The hurricane, the strikes, some of the biggest strikes that we've seen, in many years. And so those were some of the reasons for it, but that still doesn't take away from the mathematical fact that we actually had fewer job creations, more people unemployed now, and the rate should be higher as a percentage of population, participating population. So the 12,000 was the lowest number that we saw in over 4 years. So the last time we actually saw that number was in December of 2020. And the biggest news for the day, of course, coming in from Nvidia to join the Dow Jones Industrial Average, replacing the rival chipmaker Intel. Now, Microsoft's part of it, Apple's part of it, Nvidia is now going to be a part of it. So there's 3 out of the Magnificent 7 that are already part of the Dow Jones. And it's a price-weighted index. So a really important thing to remember about the Dow Jones is that it's not the S&P 500 market cap weighted. It is a price-weighted index. So what does that mean? A lot of people may not understand this, but this is not a one-to-one switch, okay? And the reason I say this is because if you come over to, let's say, Intel, right? Because that's the stock that Nvidia is going to be replacing. Intel is trading at $23, right? $23 per share. So if you look at the Dow Jones, I think I have a watch list specifically for Dow Jones stocks here. Let me see if I bring it up. There we go. So we got the Dow 30. So these are all the stocks that are part of the Dow Jones. And if you essentially just sort them out through the different prices, I think Walgreens already out of it. So I think I may need to update this up a little bit. But if you just take a look, Goldman Sachs, Microsoft, UNH, these are some of the most influential stocks in the Dow Jones. It's not Apple. It is not JP Morgan. It is not, Salesforce or McDonald's. It is companies like UNH, Goldman Sachs, and of course Microsoft, both from a market cap, but mostly from a price perspective. It trades at $410. And because Dow Jones is a price-weighted index, the market cap is irrelevant. What really matters is the price of the stock. And so this is not a one-to-one flip because Nvidia is trading at $135 and Intel is trading at $23. So the Nvidia's influence on the Dow Jones is going to be significantly more than Intel had in the past. So that is, again, just the Dow Jones in itself is becoming very, very tech-oriented, after inclusion of Nvidia here. Of course, Intel never really participated a lot in this market rally or this sell-off because it was always really just having its own issues. And from a price-weighted standpoint, it was trading at $23, which was one of the lower end. It's kind of like the second lowest price stock in the Dow Jones and didn't really have a lot of influence in that particular index. But Nvidia coming in with a very nice inclusion in the Dow Jones after hours. It is up very, very nicely. I think it was trading back up to over 136, 137. It was up, I think, 3% after hours. So very nice move to the upside. So Nvidia is replacing rival chipmaker Intel, and this will get completed on November 8th. And Sherwin-Williams will replace the Dow Incorporated in the index, and S&P 500 Dow Jones responded or said in that statement on Friday. Now coming over to the market concentration and where we are in this market. So over a $225 billion increase in the S&P, still nowhere near close to almost $1 trillion loss that we witnessed on Thursday. And of course, a lot of that momentum coming in from Amazon with a very strong day post earnings. Nvidia, Microsoft, Abbott Laboratories, MasterCard, Chevron, Exxon, Oracle, Intel, all these companies pushing up. And some of the biggest losers on the day, of course, Apple here down over 1.3%. Eli Lilly, ExxonMobil, Broadcom. We got NextEra Energy, Advanced Micro Devices, some of these companies selling off. And the MoneyVest Index is still pretty neutral right now, 3.36, although I did a little bit of buying today as well. Sent out the alerts in the Discord. So again, if you want to get access to all the alerts and find out exactly what I'm trading, join our MoneyVest community, get access to the weekly options portfolio updates, members-only videos, all the trade alerts, 30 stock shopping list, entire website access. It's the first week of the month, and it's usually the best time to join. Link's going to be down below. If you have any questions whatsoever, please feel free to reach out and let me know. I'm more than happy to help answer any questions. Now, moving over to the S&P 500. So nice little pop back up for the SPX. So on the daily time frame, this right here is the nice little rally back up. However, I will like to point out that we did get rejected here significantly on the day. So amount of selling pressure intraday was pretty crazy if you ask me. And if I simply go over, I think it might be this chart, SPX. Let me just quickly break down to go over exactly where that chart is. There we go. So we got rejected at around 57.70, 57.62, around those levels. And support level is going to stay put right about here at 56.70. So this right here is going to be that support, and you can see the longer wick to the upside suggesting for a lot of selling pressure intraday, and S&P pretty much closing down, still green, but as you can see, there was a lot of selling pressure intraday. Same thing for the NASDAQ as well. I mean, we did kind of get sold off intraday, although we were up over 80 basis points, so not a bad day, but still, this entire candle is kind of overshadowed by yesterday's red day, and today's selling pressure intraday was still pretty significant. So support level is going to stay put at 17.7, and so in my opinion, I think this is a market right now which is worth dollar cost averaging into, is worth nibbling into, and that's what I'm personally doing. Is that, as you can see, Money Vest Index is absolutely cracked at 3.38. I mean, just blew past that 3.5 level, and we are in the neutral zone. And that's also what you can see on the platform here, 3.36. Right now, this number needs to get updated. 3.38 is where it's at, but it blew past that support of 3.5, and we're back in the neutral zone. So the lower it gets down to, the better those deals will be. The better the risk reward, the better the buying opportunities, the better the potential for profit. And so this is a level where I don't mind dollar cost averaging here, but it's going to be somewhat light buys. It's going to be some nibbling in to the market here as volatility still stays pretty elevated, and next week is going to be very, very important for the market. So volatility stays above 21 right now. Money Vest Index continues to come down to a more neutral level. 3.36 is where we're at. S&P, NASDAQ still down a little bit over 2 to 3% from their all-time highs. And so there is, in my opinion, an opportunity to nibble into a little bit and wait for better opportunities as the market continues to, in my opinion, roll over. It comes down to better support levels, and the Money Vest Index, the volatility, the market breadth, everything gives us better buying opportunities. As you can also see that from a market breadth standpoint, percentage of stocks trading above their 20 SMA has now come down to 33%. So there's 67% of stocks that are trading now below their 20 simple moving average. Same with the percentage of stocks trading above their 50-day moving average. And then, of course, if you take a look at percentage of stocks trading above their 200-day moving average, still pretty elevated, over 68%. So the first two, of course, are getting blown past. Majority of stocks trading below their moving averages. The 200 still kind of holding up because we're still within the context of an uptrend. So the moment this number starts to come down, accompanied with other indicators that we like to follow, that's going to be go time for me to dollar cost average aggressively into the market. So that's going to be it for today, everyone. I'm going to be sending out updates for the Max 7 technical analysis, as well as the options portfolio update, as well as my Money Vest Index historical data analysis. That's also a video that I'll be posting for members only. Everything's going to be coming out over the weekend. As always, make sure that you drop a like and subscribe to the channel. Link's going to be down below if you're interested in joining us. Again, there is the first week of the month. That's the best time to join. You get access to all of these additional features. You engage with over thousands of traders, investors on our Discord, weekly option trade alerts, options portfolio updates, investing alerts, MoneyVest website access. Everything's going to be available with the link down below. As always, happy investing, and I will see you all in the next video.